Hello, friends. With regards to the economy subject, we have started the chapter of national income accounting, and in fact, we have covered the many topics which are being associated with the chapter of national income accounting. Like we have discussed the four major economic sectors, we have discussed the circular flow, we have discussed like the four factors of production, we have discussed the definition of national income accounting, we have discussed what are stock versus flow variables, we have discussed the nominal national income to the real national income, what is the difference between them, what is base year. We have also discussed what is intermediate good, what are final goods, and these are the different. We have discussed depreciation of fixed capital. So these are the different things which we have covered in the different videos of national income accounting. Now what we are going to do is like we are going to discuss one important concept which is known as like the three types of expenditures on final goods. So still the last topic is being pending on the intermediate goods and final goods. Now we are discussing the three types of expenditure on final goods. Ante, so we know what are final goods. Final goods are like, since we need to know with regards to final goods, national income accounting we are only measuring the value of final goods. అందువల్ల ఫైనల్ గూడ్స్ మీదనే మాట్లాడతాం. అండ్ వీ నో దేర్ ఆర్ టూ టైప్స్ ఆఫ్ ఫైనల్ గూడ్స్ విచ్ ఆర్ కన్జ్యూమర్ గూడ్స్ అండ్ ద క్యాపిటల్ గూడ్స్. Now we are going to discuss what are the three different types of expenditures on final goods. The first type of expenditure on final good, that is known as PFC. Now what is this PFC? The full form of PFC stands for private final consumption expenditure. This is the meaning. So private final consumption expenditure. Now what is PFC? So private final consumption expenditure ante it is the expenditure done on final consumer goods and services by the households. So it means like if the households incurs the expenditure on final consumer goods and services, then it means like they are contributing to PFCE. So this is the important point which we has to keep in mind. If you buy the marker, if you buy the notebook, like if you buy the mobile phone, then it means like you are contributing to PFCE. Now what is the second type of expenditure on final good, which is known as GFCE? Now what is the full form of GFCE? GFCE, government final consumption expenditure. It means it is the expenditure done by the government on final consumer goods and services. It means like if the government incurs expenditure on buying furniture, buying stationery, then it means it is also contributing to GFCE. Now, the next type of expenditure which we are discussing is referred as gross domestic fixed capital formation. So, the next type of expenditure is known as gross domestic fixed capital formation. This is the next one which we are going to discuss. Now, what does it mean, gross domestic fixed capital formation? In short form, it is referred as GFCF. This is the short form of gross domestic fixed capital formation. Now, what exactly GFCF is? GFCF means it is an expenditure done on new capital goods. Remember, it is the expenditure on new capital goods. Now, who is going to incur expenditure on new capital goods? Generally by the firms, followed by the government, and rarely households also incurs expenditure on new capital goods. Now that is what exactly GFCF is. So gross domestic fixed capital formation ante if the expenditure అనేది కొత్త క్యాపిటల్ గూడ్స్ మీద ఉంటే దాన్ని మనం జిఎఫ్సిఎఫ్ కాంట్రిబ్యూట్ చేస్తాం. ఫర్ ఎగ్జాంపుల్, ఒక ఫర్మ్ ఇట్ బైస్ ద న్యూ మెషిన్. సో వన్స్ ఇట్ బైస్ ద న్యూ మెషిన్, ఆటోమేటికల్ ఇట్ ఈస్ కాంట్రిబ్యూటింగ్ టు జిఎఫ్సిఎఫ్. Now, generally, government contributes to GFCF through infrastructural development. అంటే గవర్నమెంట్ కొత్త రోడ్స్ వేసిన, కొత్త పోర్ట్స్, కొత్త ఎయిర్పోర్ట్స్ ఇలా బిల్డ్ చేసినప్పుడు దెన్ ఆటోమేటిక్గా గవర్నమెంట్ ఈజ్ లైక్, సిన్స్ ఇట్ ఈస్ క్రియేటింగ్ ద న్యూ క్యాపిటల్ గూడ్స్ ఇన్ ద ఎకానమీ, నౌ దట్ ఈస్ హౌ గవర్నమెంట్ కంట్రిబ్యూట్స్ టు GFCE along with the GFCF. Now there is only one case where households contributes to GFCF. Generally, whenever we talk about the households, they contribute more to PFC. 99% of the contribution by the households only to PFC. but there is only one case where the households can also contribute to GFCF. Generally, GFCF is mostly contributed by the firms. Now, a case entante, if the households buy new house, then since they are buying the new house, it means like they are also contributing to GFCF. So this is the only example where you can find households contributing to GFCF. So these are the three types of expenditures. Now, if you look at the name of the third type of expenditure, even though the name is somewhat larger compared to other type of expenditure, now if you look at the inherent meaning, like now why I have used the term gross. The reason why I have used the term gross, because so gross antene means we are not deducting the depreciation. So whenever we buy new capital good, depreciation of such capital good అనేది చాలా rare case అన్నట్టు, immediate గా జరగదు. That is why we have used the term gross. Now why I have used the term fixed capital formation, because new capital is being formed, like when you build new roads, when the company buys new machine, new capital formation is being done. Now what exactly the term domestic means? Here the term domestic means we have to understand it as domestically used. Now what does it mean? Generally national income lo we generally talk, whenever we use the term domestic, it means domestically produced. But in this concept, domestic means domestically used. అంటే ఒక firm, if it imports a machine from other country, since this machine is being used in our domestic country, then I can say that this firm is contributing to GFCF. So this is how you have to understand the point. Now once we have done the three concepts, like the PFC, GFC, GFCF, now there is one term which is like close to the GFCF, but it is not the fourth type of expenditure, but there is some minor difference in terms of its concept. Now the next one which we are going to discuss, which is close to GFCF, is gross domestic capital formation. Now I have removed the term fixed before capital. Now gross domestic capital formation, which is referred as GDCF. Now what is this GDCF? So GDCF simply refers to the sum of GFCF plus change in unsold stock or inventories. So this is the concept of the GDCF. Now what is so GDCF simply refers to the sum of GFCF plus change in unsold stock or inventories. It means like so now what exactly the change in unsold stock or inventory means? Now change in unsold stock or inventory ante entante, now it means like it is the difference in the values of raw materials, semi-finished goods, finished goods lying with the firms. This is the important line, lying with the firms at the end of the year to the beginning of the year. This is the point of what exactly change in unsold stock or like the inventory means. Now let us understand with an example. For example, if you visit a car company and you ask the owner, సో ఇప్పుడు ఎట్ ద ఎండ్ ఆఫ్ ద ఇయర్ అంటే బిగినింగ్ ఆఫ్ ద ఇయర్ అంటే ఫర్ ఎగ్జాంపుల్ 2025-26 అనేది మన ఫైనాన్షియల్ ఇయర్ తీసుకుంటే 26 March 31st is the end of the year, 25 April 1st is the beginning of the year. So if you ask the owner of the car company, tell me what is the value of raw materials like that steel, tiles lying with you, comma semi-finished goods. Semi-finished goods అంటే steel frames, car frames, and finished goods means like the cars which is being produced but not being unsold, but not being sold. So ఎంత end of the year లో ఉన్నాయి, beginning of the year లో. So the difference gives you the change in unsold stock. It is also known as inventories. So this is the point which you have to keep in mind. So inventories అంటే ఒక కంపెనీ దగ్గర ఎంత రా మెటీరియల్స్ ఉంది, ఎంత సెమీ ఫినిష్డ్ గూడ్స్ ఉంది, ఎంత ఫినిష్డ్ గూడ్స్ ఉన్నాయి చెప్పే కాన్సెప్టే ఇన్వెంటరీస్. ఇన్ ఎకనామిక్స్ this is also referred as working capital. So GFCF is referred as like the fixed capital. So the fixed capital plus working capital gives us the GDCF of the economy. So that is why whenever we use the term capital, we are mostly referring to fixed capital. So fixed capital means the immovable thing, the long term man-made thing. Working capital means the raw materials, semi-finished goods which is lying with the firms. Now this is the concept of GDCF. Even though GDCF is the sum of GFCF plus change in unsold stock or inventories, but major portion of GDCF is covered with the GFCF. That is why in the newspapers, whenever you read like India's GDCF contribution is rising, it means like India's GFCF is rising. This is the how you has to connect within the newspapers. Now, GDCF is also known as investment expenditure. It is also known as consumption, like the capital expenditure, or it is also known as capital formation. So these are the different terms that are being associated with the GDCF. Now, one important point which we have to keep in mind with regards to gross domestic capital formation is GDCF is such a type of economic concept where it helps in determining the long-term economic potential of the country. When I talk about the long-term economic potential of the country, which means like, so after few years, what can be the possible GDP growth rate of the nation anedi, we can know through GDCF of the present times. So these are the different things which we have to understand, the three types of expenditure, the GDCF,